Transfer pricing defined. Transfer pricing refers to the price agreed to in transactions performed between related companies in which goods or services are transferred, which may be different from the prices agreed by independent parties. When independent enterprises transact business with each other, the conditions of their commercial and financial relations, for example, the price of goods transferred or services provided, and the conditions of the transfer or provision of services, ordinarily are determined by market forces. However, when associated enterprises transact business with each other, their commercial and financial relations may not be directly affected by external market forces in the same way. When transfer pricing do not reflect market forces and by extension the arm's length principle, the tax liabilities of the associated enterprises and the tax revenues of the host countries could be distorted. Therefore, the Organization for Economic Cooperation and Development, OECD, member countries have agreed that for tax purposes, the profits of associated enterprises may be adjusted as necessary to correct any such distortions, and thereby ensure that the arm's length principle, the authority for which is Article 9 of the OECD Model Tax Convention, is satisfied. The methods used in determining transfer pricing are the traditional methods, which are comparable and controlled price method, resale price and cost plus, and the non-traditional methods, the profit split and the transactional net margin. Discussion of subject area. Intra-group services as they relate to transfer pricing. This is the provision of services by one member of a multinational enterprise, this M&E group, to other members of that group. Where such services are provided, the arm's length prices must be established. There are two critical issues in the analysis of transfer pricing for intra-group services. Those issues are whether intra-group services have in fact been provided, what should the intra-group charge for tax purposes be as they relate to the arm's length principle. The criteria for determining whether intra-group services have been provided. For the determination of the provision of intra-group services, it is essential to prove that the services provided convey economic or commercial value to the recipient, thus enhancing its commercial position. How to prove economic or commercial value? This is proven by establishing that an independent enterprise in comparable circumstances would have been willing to pay for the services performed for it by an independent enterprise, or would have performed the activity in-house for itself. Once it is determined that an intra-group service has been rendered, it is necessary to determine whether the amount of the charge, if any, is in accordance with the arm's length principle. This means that the charge for intra-group services should be that which would have been made and accepted between independent enterprises in comparable circumstances. Arm's length principle. When independent enterprises transact business with each other, the conditions of their commercial and financial relation, example, the price of goods transferred or services provided, and the conditions of the transfer or provision ordinarily are determined by market forces. How is the arm's length principle proven for intra-group services? The arm's length principle, as stated previously, is determined via the independent company test. This means that the charge for intra-group services should be that which would have been made and accepted between independent enterprises in comparable circumstances. Allocation of services between providers. Intra-group services are allocated to related companies either directly or indirectly. Allocation of services through direct charge. This occurs where there exist specific service needs, therefore creating a univocal relationship between the provider and the recipient. Allocation of services through indirect charge. This is the situation where there are multiple providers, making it impossible to establish a direct charge of the service. Note, whether due to regulatory reasons or administrative practice, tax administrations usually do not accept the deduction of services allocated through indirect charge proportionately to the number of favored branches. Examples of intra-group services. 1. Administrative services. For example, Planning coordinates budgetary control, accounting, auditing, etc. 2. Financial services, for example, loan contracts, management of interest, exchange risk, etc. 3. Technical services, for example, contract research. Examples of non-intra-group services. The provision of services where there is no need for such services. Services provided incidentally to some members. Duplication of services. Service already being provided by the member itself or another third party. Certain standby charges. Shareholder activities. The parent or the original holding company performing services for its members solely because of its interest in the member. Valuation methods used to verify intra-group services. The comparable and controlled price method, CUP. In theory, it is the most reliable and straightforward method to determine the normal market price and is particularly applicable where the provider of the service has made a direct charge to allocate the service to the recipient. The cost-plus method, used primarily where an internal or external comparable cannot be found. It should, however, not be automatically assumed that associated enterprises have sought to manipulate their profits. The profit split method, it is a very useful method. Conclusion. While it is expected that contracts exist before the provision of intra-group services, it is not advisable to base inspection decisions either to validate a service or to reject it on the fulfillment of formalities. In any event, it should be more representative that the company should present a report explaining the need for the service, the manner in which it was allocated, and the expected earned profit. Further, the company should maintain proper information and documentation to support the consistency between the service rendered and the expected service. This should include evidence that the service was actually provided, such as the existence of true and accurate documents, records, invoices, reports on activity, performance, and evidence of expense and disbursements related to the services. Transfer pricing defined. Transfer pricing refers to the price agreed to in transactions performed between